Hi guys, welcome to another episode on the trades we missed last week. So without any further ado, let's go straight into our chart. And the first trade for last week Monday, was a bullish trade. As you can see here on our 3 minutes time frame, we have a bullish trade here. First of all, we can cite a fair value gap right here. This is a fair value gap on our 3 minute time frame. We have a fair value gap here. The market comes back down to tap into that fair value gap and gives us a break of market structure here. Now we have a break of market structure and also a new fair value gap prior to that break of market structure, and this market structure has indicated that we have a bullish trade. So we'll put our entry just like this here at the start of this fair value gap. We have our entry here and our stop loss right below that low that created for us our fair value gap, and our take profit would be above this previous high right here. This one here, this would be our take profit, and this would have given us a risk reward of 2.16 ratio, given that we have a fair value gap at first, then we have a tap into that fair value gap, and that was our first trade for last week on Monday. The next trade is our trade number 2 right here, and it's also a bullish trade. Now we have, as usual, our first fair value gap. The market taps into it, then creates for us a break of market structure right here. Now we have a break of market structure here. You see, as markets cross past this previous high, we have a break of market structure, and prior to that break of market structure, we have a newly formed fair value gap right here. Let me put this aside to show our newly formed fair value gap right here. This is it. For those that didn't see it clearly, this is it here. So we have an entry, and this is how we put our bullish entry for our trade number 2 right above this fair value gap. So as the market comes back to react from this fair value gap here, we have a bullish trade, and our stop loss will go like this. Our stop loss would be below that previous low that created for us our fair value gap right here. So we have an entry here for a bullish trade, and our take profits would be at any previous high. You can either put your take profits here. This would be a risk to reward of 4.19. So we have a 419 risk to reward ratio. The next trade is our trade number 3, and our trade number 3 is also a bullish trade coming from a previous fair value gap right here. We have a fair value gap right here that the markets reacted from, and we also have a break of market structure right here. Let me show you guys the break of market structure here. We have a break of market structure right here, but as you can see, at this point we don't have a fair value gap here. We do not have a fair value gap here, but we have a fair value gap at this spot here. So this would be our entry right at the start of this fair value gap. We're going to put our entry here. We have a first tap into a fair value gap, and market created for us a fair value gap here. This one right here, this is a fair value gap. So markets would want to come and fill this fair value gap and move to the upside. This would be our stop loss right here below this low. Our stop loss will be there, and our take profits would be at any previous high at all. Now we have a previous high at this spot here, and we also have another high here at this dotted line here is another high we can use for our TP. Now you can see how this first TP has a 1.98 risk to reward ratio for a bullish trade on our third trade, and using this other dotted line here would give us 3.71 risk to reward ratio. That was our trade number 3. Now moving on to our trade number 4, you can see how markets created for us a fair value gap in our number 3 trade. This fair value gap right here was tapped into by the price and created for us a newly formed fair value gap here, and also a break of market structure. As you can see, a break of market structure here. As price taps into this fair value gap, we have a break of market structure, and prior to that we have a fair value gap here. So at this fair value gap would be our entry right here. So what we trade is basically first fair value gap, break of market structure, and an entry before that. Now we have our bullish trade, our third bullish trade, or yeah, this is our fourth bullish trade for the week, for last week. Now this is how it's going to be. Our stop loss would be at this previous low that tap into that first fair value gap, this one here, and our entry at the start of this fair value gap, or at the middle, because of this breaker behind it. So we put our entry here, and you see our price taps into this fair value gap about 2 times, and our take profits would be at this previous high here, giving us a risk reward of 1.86. or we can as well use this second TP right here, this one here, and our TP would be like this, and our risk to reward will be 3.35 risk to reward ratio for our second TP. Now moving on, we have our trade number 5. Now this trade number 5, as our trade number 4 goes to our TP, we have the next trade right at the corner. So we have a fair value gap here. Here you can see a fair value gap, and this is indicating a demand area. Now we have a fair value gap here, and as price taps into that fair value gap, you can see the multiple taps, giving a reason for market to react from this area. As markets reacted from this area, it's also created a break of market structure here. This is a break of that previous high, and you can see market also closed above it with this next candles, and the next one is our fair value gap right before the break of market structure. Now this is how our entry would be. We have a long position right here, like so, at the start of that fair value gap, as market comes back to tap into it, and our stop loss is right below that low that created for us that fair value gap right here. The next one is our TP. So if we enter the market, we should know when and where to place our take profit. Now because of greed, some might not want to take profit at that spot, so you can actually place it automatically. So this would be our TP right here, right at this previous high, and our stop loss, like I said, right below that low that created for us our next fair value gap for our entry. So all the same, this is a 2.74 risk to reward ratio for our trade number 5. As you can see, we have had 5 bullish trades for last week already, and this is just Monday. So the next trade is our trade number 6, and this is also a bullish trade right here. First of all, at the end of our trade number 5, we have a fair value gap being shown right here. A fair value gap is here, after that, you can see how the market created a break of market structure right here. Market closed above this previous high, and prior to that is our fair value gap, the next fair value gap. So after your break of market structure has been cited, what you need to look for is if there's an entry, if there's a space for you to enter the market, which is your fair value gap prior to a break of market structure being shown to you. So we have a break of market structure and a fair value gap right here. So you can see how price immediately tapped into this fair value gap and rallied to the upside. So right here we have our entry, and this is it. So this is how our trade would have been last week. That was still last week Monday. So this is a long position right here, and our stop loss would go below that previous low that created for us that next fair value gap as usual, and our take profit would be at our immediate high right here. This is our high here, giving us a 2.67 risk to reward ratio. And you can also check our left side to know if there's a high we can use, but I guess not. So we can use just that's our immediate high for our take profits. And you can see how the market also rallied past that previous high and reaching a risk reward of 5.54 right here, or even 6 risk to reward ratio. You can see it like so. Boom, we have a 6 point risk to reward ratio for our number 6 trade. So because of our system, we are going to fix our TP to our previous high, which is this one right here. So as usual, a fair value gap, and a break of market structure. And the next trade is our trade number 7, and this is also a bullish trade. Now we have a demand area here. We have a demand area here for our number 7 trade. As price taps into this fair value gap, this whole fair value gap here, you can see it. Price failed to cross past it, but obeyed it. That is, reacted from that fair value gap and created for us a break of market structure here on our 3-minute time frame. We have a break of market structure and also a fair value gap right here. You can see the fair value gap here. So this is our reason for entry right here. So at this spot, you should know that market will tap into this fair value gap and rally to the upside, giving you number 7 bullish trade. So this is it. This is how our long position would be. At the start of this fair value gap, we'll put our entry here. The next one is our take profits, or you might just want to use your stop loss first. So you have to define what your stop loss would look like. And your next one is your take profits right here. So your stop loss would be at the previous low that created for us that fair value gap, the next fair value gap. So that would be our entry, and using this previous high here for our take profits, this would give us a 3.41 risk to reward ratio. That is more than 3 times your capital that you put in. The next one, so we are done with trade number 7. The next one is our trade number 8, and this is our first bearish trade for last week. You see this fair value gap right here on our 3-minute time frame. We have a fair value gap that market taps. As market try to go down, it breaks this previous low right here, right here, and comes back to respect this fair value gap prior to that break of market structure here. So this one right here is our reason for entry for our bearish trade, and this is our trade number 8, our first bearish trade for last week. So this is how I would have entered this trade. For a short position, we'll put our entry here at the start of this fair value gap and wait for the market to come back to tap into it. This is our stop loss. This is where our stop loss would be. at the high that tapped into that previous fair value gap right here. And remember this is our 3-minute time frame. So as price comes back to tap into this fair value gap, you can see we look for our immediate low for our take profits. So this would be our take profit here because we have a low here. This is giving us a risk reward of 2.74, and you see all the way markets rally to the downside. The next trade is our trade number 9, and this trade was a bearish trade on Friday. So we have a bearish fair value gap right here because market respected this fair value gap at this spot here. You can see this fair value gap is being respected right here as market tapped into this spot with multiple wicks. You can see how it's rallied to the downside and created a break of market structure, and prior to that a fair value gap at this spot here. Now we have a break of market structure and we also have a fair value gap here. This whole candle would indicate that we have a fair value gap right here. The next one is our entry. So as price comes back to tap into that fair value gap, would place our bearish entry here. Our short position would be at this fair value gap, at the start of this fair value gap, and our stop loss is above this high that tap into our first fair value gap right here. So we have for us our number 9 trade, and our take profits can be at this previous low here, giving you a 1.02 risk to reward ratio here, or you can as well put it down below to reach the previous low going to our left side. So we have another low that we can use for a much higher risk to reward ratio. So looking at our ROI like this, we have a 3.22 risk to reward ratio as market starts to reach our TP. So this was our trade number 9 for last week. And the next trade, which is our trade number 10, the last but not the least, we have on Friday at 3 p.m. As market taps into this fair value gap right here, we highlighted this whole candle. So we have a fair value gap market respected. You see how we have multiple taps into that fair value gap. So we wait for a break of market structure and another fair value gap for our entry. Now we have a tap into this fair value gap. You see how market crossed down below this previous low, and prior to that we have our fair value gap here, and this is going to be used for our entry. This is how we enter. Let me use this rectangle right here. We have our entry for our number 10 position. So this is a short position like this. We'll put our entry like so at this fair value gap, and our stop loss would be at the high that tapped into that previous fair value gap as usual. So our take profits would be a previous low. So using this low right here, we have a risk to reward of 2.5 ratio. That was our last trade for last week on the trades we missed. So see you guys on our next episode on the trades we missed last week, and let's go back to our chart to analyze and backtest more. Peace.